Good morning, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Outlook for 2nd September 2022. So starting with the commodity side of things, starting with energy. International and domestic oil prices fell on Thursday's trade as new COVID-19 measures in China could dent demand for the fuel. Additionally, the dollar index rallied to a new 20-year high in yesterday's trade and also weighed on prices. Looking ahead, prices which have started on the positive side of things this Friday morning can remain range bound over the next couple of trading sessions. Some support can come in the form of output cuts expectations by the OPEC when they meet on Monday. But overall, we see that weak demand due to fresh COVID restrictions, stronger dollar, aggressive rate hikes by the US Fed will all cap the upside of the market. So range for the domestic crude oil prices this Friday session will be anywhere between 6850, 6800 on the lower side of things to 7050 to 7100 on the upside of things for today's trade. Moving to bullion side of things, international and domestic gold prices crashed on Thursday, with the international gold prices trading below 1700 mark for the first time since mid-July, as a stronger dollar and aggressive rate hikes by the US Federal Reserve weighed on sentiments. Of course, the markets will remain range bound. Prices have started pretty flat this Friday morning and can remain range bound ahead, as markets will await the non-farm payroll number. The US economy is expected to add about 3 lakh jobs for the month of August, which is actually in line with expectations by most of the people in the markets. But another big upward surprise could boost bets for an aggressive rate hike by the US Federal Reserve, and this will definitely be on sentiments for the domestic gold and the international gold prices over the next few trading sessions. So range for the COMEX gold will be anywhere between 1675 to 1725, while domestically we see a range of 49,650 on the lower side to 50,400, 50,500 on the upside of things. Moving to base metals, copper and aluminium prices crashed on Thursday. Domestic zinc prices crashed over 5.5% amid fears of a worldwide economic slowdown and weighed down by weak China PMI numbers and fresh COVID lockdowns in that nation. Looking ahead, prices can remain range bound and will look to cues from the non-farm payroll, but overall weak sentiments from China will continue to dominate headlines, and that will keep the any upside limited. So overall, copper prices can remain within the broad trading band of 625 on the lower side to 645 on the upside of things. Finally, on the currencies and bonds, Indian rupee gave up gains earlier in the session in yesterday's trade and ended the session weak. The markets shrugged off crash in crude oil prices and exporter dollar selling on Thursday. In fact, recovery of the greenback and weak Asian currencies and equities weighed on sentiments in yesterday's trade. The dollar index, as I mentioned earlier, rose to a 20-year high, while the yen against the greenback fell to a 24-year low, as investors are expecting that the Japanese rates will remain at a very low level for a very long time. So overall, looking ahead, rupee can remain on the weaker side of things. Rupee has started weak this Friday morning and can continue to weaken this Friday against the greenback, tracking the overnight strength of the dollar. Of course, rally in the NDF markets, weak Asian and emerging market peers, and higher inflation expectation will all weigh on sentiments for the currency over the next few days. So the range for the rupee for this Friday session will be anywhere between 79.50 to 80, and a break above on either side will provide us fresh cues. Finally, on the bond side of things, Indian bonds could trade higher on Friday as market will await fresh supply at the weekly auction today. The government is scheduled to raise at least 330 billion rupees, which is $4.1 billion, through sale of bonds, which also includes an auction of 130 billion rupees of the new bond. So till that time, markets can remain range bound, but the overseas bond yields continue to remain elevated amid aggressive rate hike push by the Feds, and this will also weigh on sentiments for our domestic bonds as well. So overall, markets can remain range bound ahead of the weekly auction, but weak or higher bonds will definitely be on sentiments. So that's it from our side. Thank you for listening. Have a pleasant day. Thank you.